And of course, let's just first of all review the bond market this week. We're seeing bonds, I think, across the curve slightly higher this week. Can you just talk us through activity this week in particular?
Yeah, thanks, Wole. What we've seen on the bond market is the continuous bullish trend. The T-bill side of the market wasn't very, very active. We saw speculators take positions and sell down. So it was just marginal swings we saw on treasury bills. But on bonds, especially on the 2017 and 2022 maturities, we saw a decline in yields to about 40 basis point drop. Those yields are now at about 13.4 and 13.2 levels. The 2022 fine, it's been listed already on the JP Morgan stock index. Yeah. But the 2017, the 5 years to maturity bond, it wasn't stated. But I mean, there's a lot of appetite for that particular bond because of its tenure. I mean, mid-range levels, basically. So we're seeing a bearish trend on bonds market, but for T-bills, it's kind of stable, basically, all in all.
Of course, we did see that DMO auction this week. Can you just connect the two for us, the primary auction and the secondary market, and the linkages we're seeing right now?
Okay, what happened at the bond auction was that the rates at which most counterparties went was a correction to the market. Because of last month's auction was very aggressive. People went in very bullishly and quoted at around 12% levels. But what has happened is that these demands are not there anymore, the kind of demand we had in August, September, just before October's listing of those particular bonds. So we saw a correction at the primary auction this time around. Most times you see secondary market prices correct themselves to or take a cue from what happened at the primary auction. But this time around, we saw the primary auction, the yields pull back to above 13% levels, basically.
And of course, there was the market was awash with liquidity this week. What exactly is driving that? I know that federal allocations is usually linked to that, but are there any other factors here?
Yes, since the last major public holiday we had, we've seen federal issuances coming a bit early. Since the Eid al-Fitr holidays, I mean, we're expecting another holidays in the next 1 week. So what we've seen also is that the federal government has pushed out all monies that would have come in, or all federal allocations to states and local governments, and all other, I mean, smaller funds too have come in again. So basically, this liquidity is helping, especially on the T-bills. That's a short-term market for fixed income. Basically, it's gingering activities outside there.
Do you anticipate that the CBN may step forward with maybe additional OMO activity to mop up the liquidity?
Yes, we expect the CBN to continue with OMO. There were 2 auctions this week. Sorry, there's about 3 auctions this week, actually. There was no sale on Wednesday, and what we saw was that on Thursday, that's yesterday, the market actually identified that the CBN would like to sell at a particular range. People quoted below 14, and then they stopped at 14. Initially on Wednesday, when CBN did not sell, most counterparties quoted above 14. The CBN tried to put a peg to that, basically. But what has happened again in the market is that inflation has dropped significantly also from 11.7 to 11.3%. Yeah. This in itself is a major indicator of what can happen, basically. And already there's talks about what could happen at the next MPC. That's the meeting that where the CBN and the stakeholders determine what the interest rates will be. Basically, core inflation, that was the major talking point at the last MPC meeting, has dropped significantly from 14.7 to 13.1. And with that substantial kind of drop, would expect that there will be, I mean, marginal changes here and there. Maybe not at the rate, maybe at the CRR, maybe change it to the CRR. Some analysts voiced that at the last MPC meeting, before the last MPC meeting, that there might be a drop in the CRR just to ease in things a bit, because the market is quite tight the way it is right now.
I was just going to ask, do you echo that sentiment? Do you think the market needs that relief right now? Do you think that we need that CRR to come down a little bit?
Yes. The sentiment will be, I mean, what will write off right now is an increase in rate. Further increase in rates is a no-no. we may see marginal drop in CRR, not even the MPR, because of the success the CBN is achieving through what they have done the last two MPCs. Basically, one other issue is that the CBN will try to see how far inflation could drop. Core inflation has dropped, I mean, from 14.7 to 13.1. That's huge, despite food index going up. The food index itself is a big challenge because with the flooding in the middle belt of the country, we do not see it coming down or stabilizing at all. We will anticipate a further rise in food index. That could just tilt the balance, and the CBN will be watching that very closely. So they may, I mean, just maintain rates as it were, just to see how far inflation could drop or what would happen to the food index. Basically, those are the two key factors to watch, basically.